You're tuned back into Agriculture Today, and we continue our show and conversation with K State grain economist Daniel O'Brien and the senior economist at the IGP Institute at K State, Guy Allen, as they continue their grain market conversation. Picking up with soybeans domestically, Daniel, what are you seeing?
In this that WASD supply demand balance sheet, not a lot of changes. A small increase in planted and harvested acres by small about 210 million, pardon me, 210,000 acres for both of those. The yield figures cut down some. Small increase with the because of the acres and the production levels. Small increases, crush up some, about 15 million bushels. The export number down 20 million bushels. So the overall, the backwash of all that, the bottom line is that the ending stocks are just about unchanged. Ended up from 290 million bushels up to 300, and the price down 10 cents, still about 1.6.7%, stocks to 6.9. Really, the big issue domestically will be how we end up in the crop coming out of the field. You look at, I'm sure Chip Redman talks about this. We'll talk about this probably, but you look at the drought maps. We've had some pretty dry weather in Missouri, Southern Illinois, in the central and eastern Corn Belt, and there's some question about how soybeans will finally finish up. It might be wonderful, but then again, it might not, and so that uncertainty going on into the future, into the next supply next WASD report, crop production WASD report on October the 9th that'll be the question. But domestically, not a lot happening. If anything, that the weakness in exports that we've seen so far, a little bit weaker than had been hoped for, brought us down to 1.685. 1.6, 1.7 billion bushels, and not of the strong pace you'd like to see. So we're just continuing this shift over to domestic crush and bioenergy that's kind of crowding out exports to a bit. Guy?
Yeah, looking at the global situation, no really production changes and not a lot of changes across the whole balance sheet this month. Just to highlight a couple things, ending stocks, they brought down nearly a million metric tons to 124 million. It's still quite loose of a situation. Chinese imports and crush also left unchanged at 112 million metric tons of imports and 108 million metric tons of crush. They sort of growing some of their ending stocks there. One thing that I did notice on the carry out stocks for Brazil, they increased those by another 500,000 metric tons. So we're about 8 million metric tons higher on that carry out than we were at the 1st of September than we were 2 years ago. That actually means that Brazilian export program is going to be moving later into the year, clear into November. So it's really hard to see any joy, or there's no reason for those exports to really shift back to North America yet. And as we talk about exports, Brasilia grows everything that they can, and they export it as fast as they can. It's just taking them a lot longer with their record production to empty that tank before they switch back to us. So it's hard to see any opportunity for any love for the soybean market here in the nearest buy situation.
And Guy, what do you? So really, I think internationally will be. I think the ball will be in planting. Will be in Brazil's court, South America's court, in terms of the
Yeah.
planting season for these crops. Not too long down the road, and they'll be making those decisions with, on the one hand, low prices, and on the other, probably financial problems in a lot of these countries as we're battling out trade issues and whatever else, and on currencies and interest rates. So just
Yeah.
thought provoking to see where that'll go
On
this fall.
on that, both in Brazil and in North America, even already, a lot of growers here are talking about doing more corn or all corn even this coming spring. It's just the soybean situation is just really tough, and there's no quick fixes that on that relationship with China. They're always a very patient people, and I think in this situation, it's going to be there for their advantage not to get in get in a hurry. So it'll be interesting looking forward what we do with our corn bean planting relationship.
Yeah, and kind of the old developing wisdom is when will China enter the market to buy these commodities? Well, when we've just about given up hope that they ever will, and then
Yeah.
they buy very shrewdly. So just their revealed pattern.
And wanting to also talk about wheat today, did we really see any changes or movement when we look at the commodity?
Um, the balance sheet, uh, again, we saw, I guess, in that whole balance sheet wasn't a lot changed, except again, the USDA raised their expectation of exports for the next marketing year by 25 million, and all of it was hard red winter wheat. Now up to 325. So we were in June we were at 210 million bushels, 275 in July, August 300. Now we're 325. And when you look at the pace we've been at, it is pretty healthy. Here we're on a down week, really the last full week we had for September the 4th being reported at 4.7 million, and we were hoping to get 1.5 or 2 or 3 here up until of late. So that's a down week, and it's still way better than we've been having almost all that last market year until the very end. So uh, and Guy, I just think maybe it's a case where the best cure for low prices is low prices makes us more affordable, and add that in with some uncertainty overseas about what's coming out of the Black Sea, and I guess right now has been working to our favor on the wheat export side.
Yeah, well, just a quick question before we move to world situation, Dan. Do you think we'll see more wheat planted this fall, given the poor situation for soybeans and particularly the lower cost of inputs for wheat?
Well, I think we have moisture. And if we put wheat in, wheat has an option to it. We can put it in, see how it comes, see what the markets are in the spring if they've moved around. There's the possibility of putting something else in next go around. You at least have your foot in the door on a crop planted, and we've got so much happening in the international realm that really no less volatility coming out of the Black Sea region with Russia and its uncertainties with regard to what they actually have for a crop that I think people will probably we grow wheat in Kansas because of at least a couple reasons. One is that we're good at it. And it's our comparative advantage, and two, it fits in our rotations pretty well. So for those agronomic factors, I think we'll still plant a fair amount of wheat. It'll probably be sideways to lower as it has been for the last several years. Would that match up with your thoughts?
Well, my only thought on that is the thing with wheat is you can always turn cattle out on it and graze it. With these historically high prices for beef cattle, they start retaining a few heifers there. There's the feed. The biggest fear I think the cattle guy has at the moment is the beef prices dropping off. But turning to the global situation, look, world production was put in at 816 million metric tons. That's up 9 million metric tons from August, a big jump there. Again, that's a record world production of wheat. I don't know if we necessarily, the world needs more wheat. Maybe a few more places will start grazing it off for cattle. That said, looking at Australia, they were up 3.5 million metric tons, following the ABARE numbers at 34.5. Russian production came in at 85, up 1.5. And Ukraine production was increased a million tons to 23. That gives them combined production of just under 60 million metric tons. EU forecast increased to nearly 2 at 140 million metric tons, and Canadian production also up a million metric tons. So, with Chinese imports expected to be unchanged at 60, and world trade not real exciting there. It's been picking up a bit, but ending stocks are expected to be about 264 million metric tons. That giving us a stocks to use ratio of 32.4, I believe. So it's just hard to get excited about commodity prices across the board, I hate to say.
I would add in for wheat, really, that domestically we'll have on September the 30th, the next stocks report and the small grains annual summary report. And really, on the production side, if there are any major surprises for U.S. wheat production across these classes, we'll get that out of that September report. At least that'll be our first shot at it. So, Guy, that's all most of what I had to say. Do you want to bring it home with any final? You
Yeah,
got about a minute. Any final comments?
yeah, just one bullish note. U.S. dollars dropping midweek here to some fairly lows, below 97. We're down to the lowest levels we've seen since early 2022. That should lend a bit of support. That said, ocean freight's firmer, up slightly, just above $2,100 on the index. So that's sort of what's happening internationally on those two indicators.
The Fed came out announcements today. The Fed came out and dropped their rates, gave strong hints that they're going to do it for another couple cuts. So cheaper. That comes at a good time if I've got my economics right for U.S. export shipments, and that we'd have a little bit cheaper dollar, little bit better trade prospects as people
Well, at
come
lower
our
interest
way.
rates, so I've definitely seen some of our foreign exchange guys pick up a bit of their strength. So that should bode well for exports and new purchases, new sales here coming up in the next few weeks.
Guy, Daniel, I appreciate you both taking the time to join us today.
Thank you very much, Shelby.
That was the senior economist at the IGP Institute at K-State, Guy Allen, and he was joined by K-State grain economist Daniel O'Brien as they discussed the grain market. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you up ahead.